The US labor market has been spelling overheating conditions for several months in a row. Employment is rapidly rising, thus accelerating inflation. The fact is that consumers who have jobs spend more money, bumping up the price growth. Analysts had expected cooling in June reports. Judging by forecast, the U.S. Labor Department report should have shown that the unemployment rate remained the same. In general, the data was expected to reflect zero changes in the labor market. In other words, traders should have ignored it. However, yesterday's ADP report caused doubts that figures from the Labor Department would meet the forecast. Thus, according to ADP, the number of jobs increased by 497,000, which is enough to spur a decline in the unemployment rate. Curiously, economists had expected a rise of just 228,000. In other words, the data from the U.S. Labor Department might have considerably exceeded the forecast, thus boosting the greenback. However, the real data surprised even the most pessimistic analysts. According to the official estimates, in June only 209,000 Americans got a job. What's more, the growth in the number of new jobs for May was downwardly revised to 306,000 from 339,000. What do we see on the trading charts ahead of the publication of the U.S. labor market figures? The euro-dollar pair rebounded from the support level of 1.0850, repeating the movement seen last week. As a result, the quote returned to 1.09. Under the current conditions, the price consolidation above 1.0900 may lead to a further rise. However, traders will get a technical signal of the end of the correctional movement only when the price surpasses 1.0950. We are likely to see such a scenario amid weak data on the U.S. labor market. Meanwhile, the pound sterling left the sideways channel near the level of 1.2700 amid a speculative impulse. As a result, the quote advanced to 1.2779, though for a short period of time. This movement reflects bullish sentiment among traders. If the price consolidates above 1.2750, the volume of long positions is likely to surge under the existing conditions. This may result in a further recovery of the pound sterling after the recent correctional movement. The downward scenario will be considered if the pair slides below 1.27. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.